Hello, can everybody hear me? I'm just going to move this real quick. Let's see here. I'm going to pull up my chat box. If people are joining here, bear with me a second. All right, while people are joining in, let's see here. I'm just going to move my screen around really quick. Bear with me. All right, while people are joining in, can you go ahead and just share where you are joining from? My name's Natalie. Okay, we've got Rhonda from Tennessee. Celeste from Tennessee as well, Sandra from New Jersey. Welcome, everyone. Thank you for joining. All right. Okay. South Carolina, Orange County. Awesome. I'm in Los Angeles, sunny Los Angeles, where we are still experiencing what feels like summer. Okay. I'll let a few more people join. Today we're going to be talking about essential steps to take for your business before the end of the year, which is rapidly approaching. Some housekeeping for this session. It's going to be in two parts. So we're going to go through slides, and then if you have any questions, please put them in the Q&A box, not in the webinar chat. So we have a separate Q&A box. There are no bad questions. So put in, even if it doesn't pertain to what we cover in the slides. I'll wait for a few more people to join. We've got some people joining in from San Francisco. Awesome. Again, I am down in LA. All right. Okay, I'm going to go ahead and just get started a little bit about me. I've been with Collective for 3 years. I've had the privilege of working with thousands of small business owners, helping them understand how to better manage their business, particularly when it comes to tax and accounting. I will age myself a little bit. I'm heading into my 13th tax season. So I'm really happy to be here today and just share some tips as we close out 2025 and look into the new year, 2026. All right, so what are we going to cover today? An agenda for today is, how to close out 2025 and prepare for your tax filing. We're going to talk about some year-end moves that can help lower your tax bill. And then we'll talk about a smarter start to 2026. And then at the end, we'll go into that live Q&A portion. I do have a hard stop on the hour. So if I don't get to any of your questions, don't worry, we're going to send you a recording as well as this will be on YouTube. So, all right, a little about Collective. We are the first all-in-one financial platform that's designed for self-employed people. So somebody like you. We manage accounting, payroll, tax, so quarterly tax estimates, and then that business tax return for S Corp owners. So we have a niche in that realm. This, I'll just do a quick disclaimer. This webinar is for educational purposes only, so nothing contained in this presentation should be construed as legal or tax advice. So always consider consulting a professional if you need legal or tax advice operating your freelance business, of course. So let's dive in. Today, we're going to talk about how to close out 2025 and prepare for your tax filing. When we think about closing out a tax year, and I'll just start by sharing in my many conversations with members and small business owners, A lot of times you're going into a tax filing season. So for 2025, maybe you start organizing your finances in January of next year, or maybe you're up against the deadline in April. You can't really make any moves at that point. So in order to prepare for the tax filing, you need to get your books clean and complete before December 31st of this year. That can ensure that you can actually make some informed decisions to have a smooth tax season. And spot those opportunities early on and either incur an expense now before the end of the year in order to claim some more deductions if you're up against a big tax liability. So what steps do you need to take? Well, from a bookkeeping standpoint, we always start with reconciling the accounts. What this looks like, if you're using a bookkeeping software, for example, like a QuickBooks or like Collective, we take the business, bank, and credit card statements, and we compare that to the bookkeeping records within QuickBooks or whatever accounting software you may be using. Maybe you're just using Excel. Some people track that way, but you want to ensure every transaction is accounted for and there's no duplicates or errors. A lot of times a reconciliation is done by a bookkeeper, but it can be made easy by a bookkeeping software. The next step is to make sure those transactions are categorized correctly. So we want to review each transaction, confirm that it's labeled correctly, and then we want to separate out what could be a true business cost from anything that might be personal. This is more common with a sole proprietor that might be like commingling their expenses. Your financial reports are really important to making sure that you've captured all those deductions and that they're accurate. And then you have a clear picture of what is actually the net profit that I'm going to be taxed on. Another step, and this is a really common one that I find when I'm helping our members get set up with Collective, is that they are commingling, meaning they're using a personal account for legitimate business expenses. We want to review those accounts, make sure anything like, let's say, for example, like a Zoom subscription is just running on your personal credit card, things like that. You are allowed to claim those deductions. And I get that question a lot of like, all year I haven't really been organized. I've been running things on my personal card. Can I still claim that expense? Yes, absolutely. And a good way to do that is actually to just pull out your business activity in something like a CSV or an Excel spreadsheet, put it into Google, and start to filter through and see where those business expenses are. The next step is really it really pertains if you're a S Corp or an LLC. So for example, an S Corp owner needs to run a payroll before the end of the year. They need to confirm that they're compliant with payroll. This is a really important step. And we need to make sure that the financials match what you've actually paid yourself during the year. It can help define how much of a retirement contribution you make. So it's a really important piece for S Corp owners specifically, is to make sure that they run a paycheck for themselves before the end of the year. Next would be to consider anything that's mixed use. So a good example is a home office. If you operate out of your home, your business owes you for a portion of that. So if you're incurring all of those expenses in a personal account, a portion of that should be allocated to your business. That's something either your CPA can help you with, or Collective has. We have tools that we have our members use to capture those expenses. Lastly, the one I want to touch on is a tricky one. It's like Venmo, PayPal, Zelle. I find so many of our members are running expenses through Venmo or even income. So for example, let's say you're a photographer and your client wants to give you a deposit through Venmo, but then you use that Venmo balance to then go buy a meal. You've essentially reduced down that income. And so the way that you need to record that is by taking the full deposit or the full income amount. Let's say they give you a deposit of $1,000, that needs to be recognized as $1,000 of income. And then let's say that meal was personal, that would not be included on your books. So that's where Venmo can get a little tricky, and you just want to make sure that you're analyzing those records. All right. Oops, I went a little too fast here. So let's talk about some year-end moves that can help lower your tax bill as we move into this 2025 tax season. Your books are up to date. You can make strategic year-end decisions. So here are some expenses before December 31st that could reduce your business profit and help you lower that tax bill. Think about some final purchases you could make before the end of the year. Maybe you have an outdated computer. That's a tool that you could invest in. Maybe you need to spruce up your home office. You can do either some repairs or get a new office chair. Renew your annual subscriptions. Think about locking in a lower rate, something like an Adobe subscription where you get a discount if you switch over to an annual plan before the end of the year. You can also, which I touched on in the last slide, but you can also reimburse yourself for those business expenses that you paid for personally. S Corp owners do this through a specific method called the accountable plan that's specific to an S Corp owner. They can reimburse themselves each month for that home office expense or use of a personal car. And then those will reduce down the taxable income of the business. A big one that I don't see enough people take advantage of is contributing to a retirement account. So for an S Corp owner, you can max out the employee portion of a solo 401k contribution by December 31st. This lowers your taxable business profit. And then you can make the employer contribution that would be due in 2026. But by the end of the year, you do have to lock in that employee contribution. So this is a big one because for 2025, the limit is $23,500. So that contribution, you would need to plan for that and make that by December 31st in order to take advantage of that deduction. Lastly, you can plan for some professional development, register for courses now, certifications, coaching, things like that help you grow your business. I do want to add the caveat that you can't invest in like a new line of business and take the deduction through your existing business. An example being like, I'm an accountant. I couldn't go out and get my real estate license and take the deduction for that. So make sure that if you do plan for a professional development expense, that it's in the line of work that you're currently in. One tip I'll add here too is like most of you are probably cash basis taxpayers. And if you need some additional insight into what type of taxpayer you are, you could actually ask that in the Q&A chat. But a cash basis taxpayer means that your expenses are deductible when they're actually paid. So the day that the charge actually happens. Same thing for income. When your income hits the account is when you pay taxes on it. So if you have an outstanding bill, or I should say like an outstanding invoice to a client where you want to make sure that you're claiming that income in 2025, you want to make sure that income is deposited in 2025. Otherwise, you'll pay tax on it in 2026. So this strategy it's really important to understand whether you're a cash basis or accrual basis taxpayer to understand when you're going to incur your expense and when you're going to incur that income. If you want to take that deduction for 2025, make sure your payments are made before December 31st. All right, so let's talk about what we can do to go into 2026 smarter and what systems you could have in place to contribute to that success. So starting the year clear, clean with new systems, organized finances, that's the best way to start, right? Don't take your mistakes of 2025 into 2026. The key I see with most S Corp or even, just solopreneurs is when they're when they're consistently staying on top of their financials throughout the year, they're not playing catch up in the next tax year. So I would say to start with evaluating your tax status. Make sure that you have the correct tax status. And what I mean by that is if you're a solopreneur and you're seeing your income growing consistently, you have some big contracts coming up in 2026, maybe it's time to legitimize the business a little bit more and go for an LLC or an S Corp. An S Corp election is what would allow you to reduce some of your self-employment tax burden. A single member LLC is great as well. It legitimizes your business. It keeps you protected as an individual. So your business would start to operate under its own EIN, have its own bank accounts, and you would be totally separate as an individual. You're still taxed as a sole proprietor, but you have that legitimacy of the LLC and the protection of it. So it could be time for you to make that move. And you want to start having the conversations about that now. That way you're operating correctly going into 2026. The next step would be to just automate some key tasks, right? So think about bookkeeping and payroll, your estimated tax payments. To stay organized and avoid missing deadlines, those things need to be automated. It's so common for me to talk to small business owners who say, I got overwhelmed. It was all I could do to keep up with my contract. And now I'm here and I don't have the cash to run my payroll, or I don't have the cash to make that estimated tax payment. Life continues to happen regardless. And so making sure that you have systems in place to make sure you're not missing those deadlines is super important. Another recommendation here is to schedule a monthly business review. Treat your business finances like your personal finances, right? Sit down once a month to look at your income, your expenses. Where is cash at? This is the way to make sure that you can make confident financial decisions. A lot of times business owners will tell me, I don't know how much to pay myself, right? You can't know how much to pay yourself if you don't have those finances in order. So make sure that you're doing a monthly review. And then plan ahead for your important deadlines. Mark a calendar with key dates. I don't know, use a tool to create a calendar specific to your business for your tax deadlines. Each state is going to have different deadlines when it comes to like I'm thinking of like Secretary of State filing. Then if you are an S Corp, you have quarterly tax filings related to payroll. Maybe you have sales tax, things like that are so easy to fall behind on. So get that calendar in place now. Make sure you have alerts in place. This is something that we do for our members, and it just takes that off of their plate. And then consider some ongoing support. So partner with a professional or use trusted tools. There's so many great tools that help you to stay consistent throughout the year. And again, just build those systems and the support team now to continue to grow without the stress. So let's go into the next slide here. Before we go into Q&A, we do have a poll that I'll have Sarah launch right now. Your feedback is really important to us because it helps us, gear these webinars better to make them useful for you. And while you guys are voting, or while you guys are putting that in here, I'm going to pull up the Q&A. And then I'm going to make sure we don't have any questions. It doesn't look like any questions went in the chat, so we'll just pull up the Q&A here. All right, looks like we've got 7 questions here in the Q&A. Are we good to stop the poll now, Sarah? Looks like we are. Okay, I'll go ahead and go into, before we go into Q&A, I do have a code for you guys. If you're interested in scheduling a call with our team, Using this QR code here on the screen will take you directly to a calendar where you can book a call with our team. If Collective does seem like a good fit for you, you can use this promo code here that will give you 1 month half off. A little bit more about Collective. I did mention we're an all-in-one platform, which means if you don't have an entity in place, we can form that for you and then help you get started on the compliance pieces, which becoming an S Corp would mean having an LLC in place, doing an S Corp election, and then getting payroll set up. So we do handle that for our members. We handle all the compliance pieces around payroll. We partner with a company called Gusto, and that's included in the Collective subscription. Gusto is the payroll provider, and all of that is accessible under one login within the Collective dashboard. On a monthly basis, we do bookkeeping. We have a whole team behind the scenes, people like myself that are willing and able to hop on a Zoom call to answer your questions. We love working with our members directly and making sure you have the support you need to operate your small business. If you have an existing LLC or S Corp, we just take that over from an administrative standpoint. We rebuild your books. So if you're behind on bookkeeping, you would work with someone like me to get your books caught up, and then we file your business tax return. So book a call if you are interested in learning more. I'm going to stop sharing right now, and then we'll go into the Q&A section. And just a moment while I escape out of here, out of the screen. Okay. All right, I'm going to start off with the question from Tiff. Okay. What do you consider the key business expense categories? Great question. A Schedule C, which would be if you file as a sole proprietor, is going to have pretty fixed categories. I'll start off the top with like office expenses, supplies, meals. Meals is a little tricky. It's 50% deductible. Most meals are going to be 50% deductible. You could have equipment. You could have outside services like a contractor. And those are going to be the typical expenses that we see. All right. Melanie asks, can an S Corp deduct an owner distribution at year end after reasonable salary is paid? Is that distribution taxable on the personal side? That's a great question. So a distribution does not impact your profit and loss statement, meaning it is not deductible on your business side. It does pass through to you, and it's combined with the reasonable salary that you pay yourself. So the profit and the reasonable salary pass through to you as an individual, and you pay tax on your personal income tax return. So you've probably heard the term adjusted gross income. That's where all of your income comes in, and you pay personal income tax on that. Okay, Kyoko asks, regarding annual subscription, is it for 2026 correct? Also, how about professional license fee and professional group membership fee? Annual subscriptions, yes, I understand what you're saying. So annual subscriptions for 2026 would be, let's say you're paying in advance for your 2026 subscription. So I'll use the example of Adobe again. It's going to cover all of 2026, but you pay for it in 2025. You would still get to take that expense in 2025, even though it's a subscription for 2026. Same for any professional fees. Again, As a cash basis taxpayer, when you incur the expense, so if I go out and I swipe my credit card today, I get to claim that expense in 2025, regardless of if I'm using that subscription in 2026. Anonymous ask, is a solo 401k only for an S Corp? Can a single member LLC use it too? Yes, a single member LLC can use it. And you have the same contribution limits as an employee, and you also have the same deadline. You need to make the employee contribution by December 31st. The calculation for the employer contribution is a little bit more complicated than an S Corp, but you can work with your financial advisor or CPA to help you understand your contribution limit. Kyoko asks, I'm an independent contractor with a consultant company. They issue me a 1099. So sole proprietor. Yes, you are a sole proprietor. You will report that 1099 and any other 1099 income if it's in a related field. So let's say you have multiple consulting contracts in 2025 and you were to get multiple 1099s. Those would be reported together on the same Schedule C as a sole proprietor. Melinda asks, what is the minimum income level to reach before becoming an S Corp? Great question. Typically, it's about 60,000 in net profit. So that would be after expenses. If your net profit is around 60K, then the administrative costs of becoming an S Corp start to outweigh, or the savings start to be outweighed. Okay. Rhonda says, we have a 2-member LLC. Can we still elect S Corp? We are also wanting to move everything to a trust. Do you handle these issues? Multi-member LLC, so more than one member can elect S Corp. I would recommend making sure it is the right move for you and your business partner. I'm not sure if it's your spouse or just a business partner. When you elect S Corp for a partnership, and this, I will add the caveat that this is not within collective realm. We don't work with multi-member LLCs, but typically when I see people do this, they just want to make sure that, both owners are active in the business. They're okay with both being on payroll. Moving it into the trust is something that's a little bit out of scope for what my expertise is. So I would recommend just working with the CPA. And I just want to make sure I'm not missing any follow-up here in the chat. Sonia, do you mind moving that just move your question into the Q&A and I'll get to it. Maria asks, is there an advantage for a single member LLC to change to an S Corp? Yes, there is an advantage to change to an S Corp when your profit is between 60 and 80,000. And the reason it becomes a benefit is because your income that you're receiving through your single member LLC is subject to what's called self-employment tax. So you pay income tax on the federal and state level, depending on where you live. And then you also pay what's called self-employment tax. It's an additional 15.3%. When you switch to an S Corp, you separate from your business for tax purposes. Your business files its own tax return, and then you can split up how you take profit out of the business. So instead of your profit carrying that burden of self-employment tax of 15.3%, in an S Corp structure, you split up how you take profit out. You take distributions that are not subject to self-employment tax and payroll. By taking a payroll, it's what allows you to take the remainder of your profit free of self-employment tax. So it can be a significant tax break for you when you get into that 60 to 80K range. Hopefully that helps. If you think that you fall in that camp or will fall in that camp for 2023, I recommend use this QR code, schedule a call with one of our advisors, and they'd be happy to help, dive into your specific situation more. AJ asks, do you have a plan for single member LLC that is not an S Corp at Collective? I'm so glad you asked this question. Coming soon in a few weeks, we are opening up a new tier that will support other types of businesses, not just S Corp. So if you're interested in having ongoing bookkeeping support, quarterly tax estimate support, just like that monthly sort of maintenance of your business financials, please give us a call. We'd love to talk if you'd be a fit for that. We will send a recording of this webinar, and it will also be posted on our YouTube channel. Are you experienced with e-commerce accounts, specifically Amazon Business? Collective does have members with e-commerce accounts, Amazon accounts. So yes, we do work with e-commerce members. Caroline asks, how should I calculate a reasonable compensation? By percentage of the profits, and what is it based on? Reasonable compensation can come down to basically two factors, really. When your business is, when the net profit of the business starts to grow, we really look at reasonable compensation as wage replacement. Like, how much would it cost you to hire someone to do your job, the area you live in, the type of role you have for your business. Most likely you're wearing a couple different hats. You might be doing a lot of admin work, and then you might be doing the actual consulting. That is what you see the value in what you're offering, right? But those combined roles would come up with what would be that reasonable compensation for the area you live in. Gusto and Collective, we use a tool that nails that down exactly for you. But let's say you're more so getting started and your net profit is around the 60,000 range, and you can't afford to pay yourself exactly what it would cost you to hire someone to do your job. That's when we start to look at it based more on the percentage of profits and how much you need to take out of the business to live off of. So we would have a calculation that is reasonable in relation to what you took in distributions. Hopefully that answer helps. Caroline asks, meals Uber during a business trip should be reported as travel or separated? Oh, great question. So I have seen a lot of accounting softwares have a separate category for travel meals. That is strictly a management, sort of like a management. When you look at your profit and loss, you can see, here are my regular meals versus my travel meals. That's for you to know from like a budgeting standpoint. From a tax standpoint, travel meals and meals you have when you're just going out with a client in town, those are still 50% deductible. So the only reason I would separate out travel meals from your normal meals deduction would just be if for tracking purposes, you want to understand how much money you spend when you're traveling on meals. Uber is going to go into a travel category. Yes. I have another question from Anonymous. What percentage of profit would you class as reasonable salary? Again, you've probably heard 50 to 60%. Some people say even low as 35 to 50% of your net profit. It really just depends on the profit of your business. If you're making $500,000, you should be giving yourself a salary that is reasonable in terms of like what it would actually cost you to hire someone to do your job, is the simplest answer I can give there. Nazra asks, if I have my business, an LLC, but did not get any work through it yet. but I worked as a 1099 freelance this year. How do I navigate that? Oh, this is a great question, because if the LLC, let's say, for example, you formed an LLC thinking that you're going to do photography through that LLC, but you haven't yet built up your book of clients, and you're working a completely separate job, which is consulting as a 1099 freelance, then you wouldn't want to claim that income through the LLC. However, if your 1099 freelance income is related to the LLC that you formed, then you should give the person hiring you an updated W-9 so that they're actually paying that income to your LLC. That way you're reporting everything through the LLC. It'll make things a lot easier for you. It's still all considered, self-employed income. Anonymous asks, if you employ a contractor on a project by project basis in the US, you have to send them a 1099. If you employ contractors remotely overseas, are there a form to submit to report on this? There is a form, W8BEN, I believe it's called, that most like, let's say you use like a third party. I'm trying to think of the one that a lot of people use. Well, Gusto has one where you can pay international contractors. That form will get sent to them automatically to fill out. You don't need to report it to anyone. It's for them. It's for the contractor. You don't have a requirement to file that with anyone, or most likely you don't. Hopefully that answers your question. Daisy asks, I'm a single member C Corp with S Corp status. Should I switch to an LLC? Are there advantages with doing that? I'd have to understand why you formed the C Corp in the first place. A C Corp is a stock company usually formed to bring like on outside investment. And each state has different rules. Like some states, it may be more advantageous for you to have the C Corp. I really would have to know more about your situation, Daisy, to even advise further on that. And it's a little bit out of scope for what we would advise on a collective. And it also depends, like, are you trying to save tax? So maybe I would recommend speak with a CPA on that question, because the cost of having a C Corp can be costly in comparison to an LLC. I usually don't recommend. If it helps, I typically don't recommend many small businesses form a C Corp, but again, it could depend on the state that you're in. Anonymous says, I see that you only have 3 years to switch to an S Corp. If it takes a while to reach 60K, then does that mean an S Corp cannot be elected? No, you don't. There isn't a limit, a time limit here on how long it takes for you to switch to an S Corp. And when I recommend for people to switch to an S Corp, it really is that year over year, it's something that's going to save you in tax. Sometimes you might have an off year where you only make 30K. The S Corp comes with more administrative costs. So when you factor in the administrative costs, and then the tax savings, you want to make sure that you're net positive there, right? So switching to an S Corp means year over year, this is going to save me money. The one thing with an S Corp is once you switch S Corp, if you want to revoke that S Corp status, you no longer want the administrative burden of filing a separate tax return or running payroll. The IRS does make you wait 5 years to reelect. So I would say don't enter into it lightly, because if it's not the right fit for you, you would have to wait 5 years to reelect or open a new entity. Anonymous asked, if I have my business, an LLC, but did not get any work through it yet. I feel like I answered this one already. Sorry. I'm going to skip past this one. If I have passed through home office deductible from the previous year, but was an LLC, and this year I have an S Corp, can I still deduct that this year? Do I do it from my W-2 or from my business? I believe you're asking if you didn't claim your home office deduction in the prior year, can you still deduct it this year? Unfortunately, no. You cannot claim like a 2024 expense in 2025. Melinda asks, is it best practice to keep paper receipts and electronic copies? Yes, it is best practice. If in the event that you were audited, the IRS could potentially ask for copies of those. You can scan them on a receipt app. You could keep them in a box, but you do need to keep a copy. Kenny's asking what our YouTube channel name is. I believe it's just Collective. Sarah, do you mind linking it in the chat for us? And yes, we will provide recordings. You can go back and review. If you had to hop off and I'm not getting to your question timely, I will get through as many as I can before the hour. Sonia says, I recently began selling on Whatnot and Poshmark. They only send a 1099 to people who make 20,000 or more. I will not be anywhere close to that amount. How do I submit for tax purposes? So there is a minimum amount that you are required to report as an individual. I would say go look up the amount, and then what you would do is report it on a Schedule C. So you would have a Schedule C that would track all of the deposits that you've had, whether you're getting, paid. I'm not sure exactly how those payments are coming through to you, but most likely probably like on a Zelle or a Venmo or PayPal. All of those you would need to add up the income that you earned for this year, and you probably have hit. I don't know how much you've made this year, but you may have made enough to have to file a separate Schedule C for that. And if you're using a company like TurboTax to file, it will ask you if you had, did you have any self-employed income that's technically considered self-employed income, even if they didn't send you the 1099. Okay, Kenny is asking, if I run an HVAC business and the salary for a technician is 80 to 100K, but I want to pay myself 60K, I can't do that. Oh, great question, Kenny. So if your business is, let's say, for example, it's netting 100K, then at 60K, you're probably in a range that is reasonable in relation to the total net profit. Again, we were talking about that reasonable compensation really comes down to making sure you're paying yourself a fair salary in relation to the profit of the business, since you get a tax break on the remaining profit. So that's where more of like a percentage calculation can come into play versus running your entire profit through salary. Okay. Lindsay asks, is it too late to switch to S Corp for 2025 to take advantage of the the benefits? That's a great question, Lindsay. It depends. If you have an LLC in place, you could do a retro S Corp election. What comes with a retro S Corp election is making sure you get in compliance, so running a payroll before the end of the year. So if this is something that, if you have an LLC in place, and this is something that you think that you can manage doing for 2025, I would say reach out to a CPA or This is something we couldn't help you with for 2025. We could help you for 2026, but we're past our deadline for 2025 with collective. Anonymous asked, back to meals. Can the cost associated with hosting an event, like the venue, food, drink, etc., be considered marketing or something else? And does the food portion need to be broken out as meals expense? That's a great question. So when a meal is promotional in nature, so you're providing free food at an event, that is an instance where it could be 100% deductible. Usually the 50% deductible comes into play when it's like you're going out for a meal for you and someone else, so you make up 50% of the party. That's when it's 50% deductible. But in an event where it's more promotional in nature, it could be considered 100% deductible. I think that's everything we had in the Q&A box. We had a good portion of questions today. I do see some coming into the chat. Deepa asked, what's the best bookkeeping application? Do you recommend any apps? I'm just starting out as an LLC. Well, I personally love Collective's accounting app. I'm a little bit biased, but there are other great tools as well. If you're not ready for a full-blown, bookkeeping service, I really like Wave. They have a free option. Xero is a great option. QuickBooks Self-Employed would work for an LLC. There are a lot of good options, but there are, free options would be something like Wave. Caroline is asking, is it possible to employ my kids under the S Corp or only for partnerships? You, depending on what services they provide, obviously this is one area I want to be careful how I answer, but generally you can employ your children under the S Corp if they're performing duties. There are a lot of rules around that, so I would just make sure that you are aware of your responsibilities as an employer. Anonymous is asking, I have a pension and investment rental properties. I understand that if my income is over 150,000, I cannot claim rental expenses to reduce my tax base. The investment rental properties would be a Schedule E. They wouldn't be subject to self-employment tax. That would be passive income, probably, unless you were renting them as an Airbnb. I don't know exactly how to answer this. I am sorry, Anonymous. It's getting a little bit into individual tax, which is out of scope for what we're talking about today. Kinney is asking, what business allows you or has a gray area for employing your kids as soon as they're born? Having your kids employed in your business would mean that the duties that they're performing for your business would be like ordinary and necessary. Maybe they are doing some administrative work. I don't think a baby could do administrative work, but perhaps you are a influencer and they are a part of your content. So those are some areas where we do see younger children being employed. Generally, it's not the safest to do that. So I would say, again, consult with someone, whether it's a CPA or a payroll company. They will have guidelines for you around what is required to employ your children. Even if they're not a W-2 employee, they could be like a 1099 employee, and there are limits there where they don't have to pay tax. So hopefully that helps, Kenny. I think I've gotten to everything in the Q&A. I really appreciate everybody who's joined today. I'll give a minute or so more. Hopefully this session was helpful. Again, if you're interested in scheduling a call with our team, this QR code on the screen will take you directly to a calendar link. You will meet with somebody like myself who has a lot of knowledge about an S Corp or LLC to help point you in the right direction. The code is fall20 for 50% off at 1 month. I don't see anything else popping up in the Q&A, so I will go ahead and wrap up. Thank you again, everyone. Have a great Wednesday. Bye.